Hello, it is almost 3:30 here in the New York City area on October 26th, and we're going to give a update today on Tesla. Now, we covered some of this yesterday in the morning where we saw the signals of options buying in what sort of looked to us like almost forced options buying in like short covering type flow. You can read all about that on Zero Hedge. This article called Here's the Gamma Bomb. We also did a video that we will link to this article as well as the video we did yesterday in the notes. And then overnight, when we got our data refresh, we talked to our friends at Bloomberg and we outlined a lot of the flow that we saw yesterday and why we thought that flow was important. Again, we'll link this article as well in the notes below. But let's turn to exactly what is happening today. Overnight, we saw that the bulk of options positioning shifted from the 900 strike all the way up to the 1000 strike. Now, that is really due to the fact that there was so much of a jump in the stock price that Gamma, which is highest for at-the-money options, really pushed into this 1000 strike. What is so fascinating is that despite the fact that we had 2.4 million calls yesterday, and 1.2 at least of those calls, 1.2 million of all that call volume was focused on the 1029, that is the nearest expiration. The amount of gamma tied to that expiration actually decreased overnight. So again, we had huge 1029 options call volume, but the amount of gamma dropped. And not only did the amount of gamma drop, we saw that the call open interest only increased by about 200,000 contracts. So what this is telling you is that yesterday's flow was not really so much an adjustment in the value of the fundamentals of Tesla, but a lot of transient meme stock type day trading activity and flow. That is what we sort of read off of yesterday's activity. Now, to start the day today, we saw the stock just rip higher. It almost hit 1100 before it came down very, very sharply. So how do we read that flow? How do we read what is happening today? So at this moment, we've seen 1.8 million calls, which is shy of yesterday's volume, but this would still be the second highest volume of the year, and 1 million puts. So that's substantially higher than yesterday's flow. And again, it's highly concentrated in the 1029 expiration. And we want to talk about two flows that are really going to pressure the stock now. First is Charm, which is the result of options decay. And then the second one is going to be Vanna, which is what happens when implied volatility comes down. Now, those two are sort of inextricably linked, right? The time decay and the change in volatility of the asset, so that the Charm and Vanna flows sort of blend together. But let's flip over to Interactive Brokers quickly, and we're going to show you the volatility sort of dashboard that we've built. So in here, you can see things like skew and the at-the-money implied volatility change. And you'll notice for the at-the-money volatility, there's just such a big jump from quite a low level here a couple days ago all the way up to about 50% at-the-money vol, which is quite high for Tesla, but not jaw-dropping considering where at-the-money vol often is, as you can see in August and September. But what we really want to focus in is this bottom term structure view. Now, the term structure here shows the at-the-money implied vol over various different expirations. And what you can see here is that the front month, that is October 29th through really November, is very elevated over longer term options. This is called backwardation. Now, if you compare the term structure of today versus last week's term structure, which is this sort of much lighter yellow line, you can see how elevated this is. All of the options essentially for this year, December, November, etc., that whole curve shifted up. But the biggest jump was in these sort of front-dated options. Now, these front-dated options is where all of the volume took place, particularly that day trading volume. Generally, you only see a curve like this when an asset is crashing. If you think about when the VIX spikes, the VIX spiking is essentially telling you that the S&P options are backwardated. So in this case, there was a crash higher in Tesla. People were falling over themselves to purchase call options, and the prices of those call options were going up massively. So what's happening now, if we add in the 1029 expiration volume here, you can imagine that each sort of hour that we get closer to 1029 expiration, these call options are decaying. And that's the charm aspect of this. Dealers who are long stock as a hedge against all of these call options can start to slowly sell out of their stock position if the stock comes down, but also as time passes. That as time passes, the call options lose value, right? The premium comes out of those calls, and they can start to sell off some of their long stock hedges. And not only that, the implied volatility that was so elevated, there was so much energy when the stock was just ripping higher, 5-10% every hour, that implied volatility starts to come off. It's just a natural function of the fact that the stock can't maintain that energy. And when that call implied volatility comes down, that is the Vanna trade. Dealers can start to sell off more of their stock as the volatility comes in. So the time decay and the implied volatility coming in, they're linked, but The key takeaway here is that those call options are losing a lot of value. Dealers can sell off, and it becomes something of a reflexive cycle, a feedback loop, right? Stock comes down, they can sell more stock, time passes, vol comes down, all of that, and we can start to unwind, or dealers can start to unwind that long stock hedge. So much of that position, as we showed in the Equity Hub view, is again tied to 1,000. We're kind of looking at this as something of a pinning area into Friday. And if the stock really wanted to have another sort of big squeeze, we would look for that really to happen on Monday, because typically what happens in these meme type stocks is that on Monday and Tuesday, traders rush in to buy call options. And there's enough time in there, and implied volatility is still low enough that the options are cheap enough that the traders can rush in and get a decent amount of value. And then as we move into Wednesday, Thursday, Friday, that Vanna and charm flow really starts to work against those short dated options. So again, we're looking for sort of a 1,000 area pin into Friday. The weight of the options market is kind of tilted a little bit against Tesla here. It would take a lot of momentum and a lot of call buying to reinvigorate this position, being that there's so much decay and force against those options, again, with that expiration coming up. So that's our view on Tesla for now. If you have any questions, please put them in the comments below. You can also hit us up at SpotGamma on Twitter, and we want to make sure you know that you can head over to spotgamma.com. You just click subscribe now, and you get a free 5-day trial of our service, which includes a twice daily note from myself. And you can also use our Equity Hub tool, which allows you to analyze the options position in over 3,000 different stocks.